following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To begin a great relationship, know what you want. Know what needs your mind out, what needs your body out, and what fits well with you. There are millions of men and women. Some of them make a great match for you, and others won't. The two of you only need to be like a what? A key and a lock, a match that works. Market-wise, let's take a look at it out here. We have the Dow Industrials down 450. NASDAQ is off 100. S&Ps are down 41. Percentages, what we have out here, you have the Dow down 1.8. NASDAQ is down 1.4. S&Ps are down 1.6. Gold contract flat. $1,317.70. We get over to that gold contract, take a look at it. You get a classic, folks. You get a rejection of lower price. Bottom line, you had an expansion of volume, but guess what? It's lighter than we were going into, so it's pretty intense. Gold contract out here today got down to 1303. You're at 1317. A close inside 1309 is saying you're going topside once again. If we go to the GDX, we take a look at the GDX. Volatility's all over the place. There's no two ways about that. GDX today got down to a price point of $20.94. We've done 35 million shares. You're going into 101 million shares. That low that was established is 20.83. We are at 21.58. And the benchmark to keep your eye on is 21.27. 21.27 is the first low that was generated in December of 2017. So you had 2017. That's when, bottom line, you had the first low. You had the spike low on February 9th. And bottom line, you got all the way down to that low just about. We went to 2094 versus 2083. Rejected it. Dramatically lighter volume. You didn't. You had already busted the downtrend on the 14th. That's saying, guess what? We are going back up into 2486. This is going to be one heck of a market, I can tell you that, folks, because you have the volatility in currencies, you have the volatility in equities, you have the volatility in commodities. And the first get-go out of here was the 10-year note. The 10-year note had been trying to basically catch a bottom. 10-year note has been going down for 10 weeks. The first bottom it made was on the 15th of February. That baby got down into the price point. Get this. This should got down into the price point of 120.01. Bottom line, you tested that. 120. You got to 120.02. You tested that on the 21st. You had some strength last week on the 26th, and it follows through out here today with strength also. Let me get the M contract up. We're on the M contract now. These just rolled, so you're at 120.18, and 120.18, what you're doing is that you're actually taking over your swing point, and you get the volume behind the move. So bottom line, this sets up 10-year at 122.02. Big number. Big number. The yield itself right now is at 2.806. The high has been 2.95. King dollar. What do we have with king dollar, folks? King dollar's getting toasted, roasted, all of the above. King dollar got up to its swing point, couldn't handle the swing. Well, actually, couldn't handle the downdraft. When King dollar's been going down since January of 2017, January 3rd to be exact. Bottom line is that the last big drop came on January 12th. That's when we went from 91,630 to 95.30. Bottom line, got up to that level, couldn't handle that level. Right now we're at 90.265. That would set up that you're going to go right back after the lows out here of 88,150. That's on the shorter term basis. Longer term basis, what you have out here is that you have, let me get the longer term basis out here, you have a monster ABC structure on the way down, and we're talking about an 82,340 handle. So what you're going to see is that when you take a look at this too, it actually really didn't get that close to getting back in the higher range. Back in the higher range, you'd have to get somewhere in the price point about 92 to 93. Some of the higher volume stocks out here, and you get a lot of them out here today. You get the GE's leading it down. GE did break the 14 bucks out here today. You're at 14.02 right now. That's down 10 cents. You get Apple off 290. You have, let's see, we have Snap down 53 cents. NVIDIA's down 10.46. You had the TAFs going to come into play right now. You had the U.S. Steel is up by $2.76. Trading at 46.27. The AKS, which is another steel stock, that is up 38 cents. That couldn't even get any traction, so it's kind of, well, it's really intriguing. They're going to get more money for the steel. We're going to pay more money for the steel. Bottom line, we're going to pay more money for cars. We're going to pay more money for quite a bit with steel tariffs coming in, folks. Steel's in just about everything. GM is showing it right here. GM is breaking a swing, breaking it with volume. GM's an ABC structure on the way down. Let's see, you get 45, you get $6. You're talking, well, it's actually right at the ABC structure right now. So let's see what we get on a longer term. So in a longer term, yeah, you're back inside the lower range. Longer term, bottom line, now GM is making its way for 34 to 30. Ford is also getting toasted and roasted. What you have with Ford's going after its lows. You're at $10. The 6th of February low is $10.19. We've hit 10.20 thus far. So you're going into that level, and you do have an expansion of volume, how we come into that level. We go over and we take a look at the Dow Industrials, what's moving the Dow Industrials. And, of course, because it's a price-weighted index, we know it's going to be the big stocks that move it. Boeing's putting 63 negative points. Goldman's putting 30. The only two stocks that you have putting any positive points inside the Dow Industrials is that you have Verizon putting 2 points. 3M's putting a negative 29, CAT 25. These are all negatives. United Technologies 24. Inside the NDX 100, strength versus the weakness. You have Shire is up 4.6%. Liberty's up 2.8%. Mylan Pharmaceuticals up 2.3%. Taken away from it, Monster drinks, they're done. They're down 20%. No one's drinking Speed anymore. That's down 8.81. You stay right there, folks. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now down 350. You get the Nasdaq off 74, S&P's off 32. Let's go over to our man, Mr. Andy Hecht, as they do every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here at TFNN every Tuesday and Thursday, 5 to 6 Eastern Standard Time. He also has 2 great newsletters. He has the Technomental Commodity Report. That is his investments newsletter. He has the Daily Essentials, which is his daily newsletter. You can come over to our website at TFNN. You can take a look at both of them. You can get them 30-day money-back guarantee. Just go to TFNN. You go to newsletters. Andy Hecht, what's going on?
Hey, Tom, how are you? A lot of stuff going on, huh?
A lot of stuff going on. We get action everywhere.
Action everywhere. And, hey, you know, we got to start with the dollar.
Yep.
Because the dollar, you know, the dollar has caused, wrecked some havoc in commodities here. We broke out above this, this high here, this February 8th high, 90.455. Made a higher high, but it looks like we're coming down now. And really, we're seeing a lot of these commodities just trade tick for tick with the dollar. Look, I'm a long-term bear in the dollar, and I think that this rally is going to fail. The next level to watch here is the 92.36 level. If we don't get above there, probably in pretty short order in the next 2 weeks or so, we're heading back down for a lower low below 88.15, in my opinion.
Yeah, no, listen, I think it failed today. It's the bottom line.
So the dollar is giving us opportunities to buy some cheap commodities.
Yeah, no, there's no doubt, man. You know,
gold went down. I mean, that broke its recent low. Just, you know, if you superimpose the chart of the dollar over the chart of gold or silver or copper, they all look platinum. They all look very same. They're all converse.
Yes.
So without any exogenous factors going on there, you know, that we're trading off the dollar. Now, some commodities are not trading off the dollar, and those are in the agricultural sector. We are seeing some incredible rallies, particularly in the wheat market.
Yeah, that's for sure.
And we've talked about this over recent weeks, Tom. You know, I've been pointing out on my show and with you that the Kansas City versus Chicago wheat spread, which was trading for the longest time at a discount, and the long-term norm in that spread is a 20 to 30 cent premium. Okay?
Okay.
Over the last couple of weeks, we've seen that Kansas City wheat price rising. and compared to the Chicago wheat price, they've both been rising. But the Kansas City wheat price, the hard red winter wheat price, has been rising because it's been a cold winter, but there hasn't been enough snow cover to protect the crop. So you're seeing a shortage of the Kansas City wheat develop, and it's now manifesting itself into a pretty significant rally. We have the wheat price of wheat here up at $5.20 a bushel.
Right, and it looks like that break is going to go to $5.65.
Right, and if we put the weekly chart up, we last year we had a rally in wheat too, but we waited until June and July. These seeds, these crops haven't even gone into the ground yet, and we talked about the fact that looking at inflation, Mother Nature could really hold the key to inflation this year, because if we start seeing food prices go up, whoa, all bets are off. And very early in the season, look, it's March 1st. The seeds haven't even gone into the ground. Look what's happened in soybeans. But more importantly, look what's happened in soybean meal. Soybean meal has gone from $314 a ton back in late, let's take a look here. I think it was back in let me put the daily chart up, because I want to get this perfect here. Here we go. It was $314 a ton on the May contract back on January 12th. What is that, 6 weeks ago?
Okay.
We're at $400 a ton.
Yeah. Wow.
I mean, and now that has huge ramifications for animal proteins, because feed prices have gone up by more than 27%.
And this is what they feed the animals, right?
Exactly. Soybean meal. It's the primary ingredient.
Okay.
So what we're seeing cattle slip. Why are cattle slipping? Because the ranchers are saying, hey, I'm not going to pay these exorbitant high feed prices. I'm just going to process the animals early.
Right.
And I'm going to, take them into to the slaughterhouses at lighter weights, and that's going to create a short-term glut in the market. But, Tom, it takes 3 to 4 years to really raise these herds, and that means longer-term, buy another freezer and load up in the coming weeks, folks, and months, because, next year at this time, we could have significantly higher cattle prices, beef prices.
Sure, and we've seen that before. We've been doing this long enough, we've seen it before.
Right. We saw it in 2012, and history repeats itself in these markets. You're also seeing a rally in the price of corn. Now, corn should be coming off because gasoline prices have come off, but corn is going the other way because it's going that way in sympathy with wheat, and it's also going that way because it's a very dry year in Argentina. And the crops are suffering there. So
so the Argentina deal could be a big deal, right?
It's a big deal, absolutely a big deal, because they're in their harvest season now. They're coming into harvest, and we're coming into planting. Northern versus southern hemisphere.
Okay. So
you know what? The world depends on bumper crops each year, Tom. And the bottom line is, if Mother Nature doesn't supply that, 7.455 billion people they compete for these food items each year. And if they're lower than at bumper levels, watch out. These prices could be highly explosive.
It looks like they already are, right? I mean, really.
We're getting a little taste of it. I mean, look. Corn traded to $8.50 a bushel back in 2012. We're still at $3.86.
Right.
Soybeans traded almost $18 a bushel. Soybeans are under around $10.60, $10.70.
Yeah.
So there is huge upside in these markets if the weather is not picture perfect. That's the bottom line. And, we look at the technicals here, but we have to consider the fundamentals when it comes to the grain markets. Now, looking at some of the other commodities here, crude oil seems to be trading with the dollar again. The one thing that's really nagging me about crude oil here, Tom, is the XLE. And I know that that's a function of stocks, but the XLE is about 11.5% off its high, while crude oil is about 8.5% off its high. And the bottom line is crude oil should be a lot more volatile than oil stocks, and that's not happening. So...
Yeah, no, in 2014, I mean, when we get that big downdraft, the XLE did stock first. Yeah,
it led it. Right.
And ExxonMobil and Chevron, they're both
exactly.
They can't do anything.
Right. So the other thing that I really wanted to discuss, and it's very timely, and get your opinion on, and certainly give mine, is the protectionist policies announced this morning on the steel industry, on the aluminum industry, which I think is affecting the stock market today. I think that's a piece of fundamental news that have sent stocks lower, but it has not sent steel stocks. If you look at U.S. Steel, that's been booming. The aluminum stocks have also been going up, and this is going to add to volatility in commodities, big time. This is an exogenous factor, a public policy factor that is feeding. But I think that it has severe ramifications for the stock market here.
Well, that's fine. That's right. That's fine. I mean, if you just take a look at General Motors, take a look at Ford. You take a look at anyone that's supplying steel, the market cap and the amount of money lost is huge compared to what... I mean, U.S. Steel is holding, but AKS is not even holding.
Right.
Stay right there, folks. Andy and I are coming right back. We have the Dow Industrials right now trading down 370, NASDAQ down 75, S&P's off 32. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking on Mr. Andy Heck. We are talking commodities. We're talking markets. Right now, we have the Dow down 332, NASDAQ off 68, S&P's off 29, and bottom line is that we, no doubt, are going to be in a little trade war here. And It's going to cost us money. That's the bottom line, folks. Whatever way you look at it. You know, what we will have, and this is where it is always interesting, you know, about trade wars, okay? What you do get is that the steel stocks will make money. The major, you know, states that we have that push steel out, they'll do fine. You know, and there's 3 states out of the 48. But the rest of us, we're going to pay for it. So we'll see whether, you know, what kind of acceleration we got on the way down. But right now, I'm just looking. Steel is actually $7.80 a ton right now. So, you there, Andy?
Yeah, I'm there. And the U.S. Steel, where is that trading? I don't have that on my screen.
Yeah, let me pull that up for you. So U.S.
That's the big mover.
It is. U.S. Steel is up $2.57, up 5% at $46. What is intriguing here is that you know, AKS bottom line is up 43 cents, but that can't hold price. Nucor, let's see. So Nucor. And Nucor, yeah, Nucor is up 231. It's pushing with volume. I mean, these things are going to go higher. They're going to make more money.
What I think is very interesting is that this was announced, and usually when these types of things are announced, they're kind of signed, sealed, and delivered. But it was announced in such a way. It was announced, and then the word was that the president is not signing it until next week. So I wonder whether this is a negotiating ploy. You know, what's going on? I don't think, you know, we've heard the end of this yet. We'll see what China does. I mean, you know, they've been dumping stuff on the markets for years, and certainly it benefits the consumer because we pay less for these things. But it has, you know, hurt some U.S. companies. You know, if you believe in free markets, the bottom line is that, you know, you let the things flow, and the price goes to its equilibrium point based on supply and demand.
Well, what the market's showing, well. I guess I was going to say the market's showing unintended consequences, but I think anyone that understands the steel business, these weren't unintended consequences. I'm not quite sure how people are going to feel when they go home tonight and GM and Ford is getting wrecked. Do you know what I'm saying?
No. I totally agree with you. I mean, on that one. I mean, it's the question is, it wasn't signed, these tariffs. 25% on steel, 10% on aluminum will be signed next week. I wonder, you know, what kind of horse trading is going to go on behind the scenes here in the next couple of days. It'd be very interesting because I wouldn't be surprised to wake up Monday morning and say, oh, we reached a new agreement and it's going to be this and it's going to be that and we're not going to do the tariffs. So, you know, I don't think this is over with, but it's going to be very, very interesting, and it's going to contribute to huge market volatility as we're seeing. I mean, it happened immediately almost. I mean, it pushed Fed Chairman Powell's testimony today to way to the back. It kind of took all the limelight away, and I think that some members of the administration, namely Gary Cohn, are not in agreement, and Mnuchin are not in agreement with this tact. So, like I said, going to be very interesting. Volatility, fasten your seatbelts. We're going to see it in all markets. Now, when it comes to the dollar, Tom, I view this tariff thing as bearish for the dollar.
Well, listen, that's why the dollar maybe is going down, because maybe the dollar knew that bottom line that, you know, this baby is trouble, you know. I mean, the thing that
yeah, go ahead.
No, the thing that just blows my mind is that the aspect of how much is made with steel is phenomenal. So
it's phenomenal.
Like,
I mean, it's the basic building block of all.
If they want to see us pay higher prices, well, we're going to get it, and we're going to get it immediately. So
yeah, well, it'll certainly make the bill for rebuilding infrastructure a lot higher.
Yeah,
no question.
Yeah.
Couple of things to watch for tomorrow. Sugar. You know, in volatile markets, Tom, we get a lot of false moves. We get a lot of false breakouts to the upside, a lot of false breakouts to the downside, technically. We had a break to the downside in sugar earlier this week. It broke out of its trading range, traded below 13 cents a pound after the March-May roll, and it has just boomeranged higher. If we get a close above the 13.77 cents per pound level tomorrow, we'll get a key reversal on the weekly chart. We're up to around 13.69, 13.70, so we're close. So that's something to keep an eye on there in that sweet commodity. We see cocoa breaking out to the upside. We'll see if that can hold. But that's been a sustained move over months since December. And we discussed in December that when Cocoa Finger closed his fund, he probably had a big liquidation, and the price pattern since then, has kind of bared that out. And I think it's worth mentioning that a lot of these kind of trading gurus who have stepped aside from the market. Last August, Andy Hall stepped aside from the market. What happened to the price of oil? It went from $42 to $66 a barrel, and he was a bull. What happened with cocoa? Tony Ward, the biggest cocoa bull in the world, stepped aside. Went from $1,800 to over $2,250 a ton.
Right.
It's these are signals in markets that you got to pay attention to, and we talked about that a lot.
Yeah, we did. So let's see. Let's get over here and take a look at silver, because in this commodity market out here today, we got some action inside silver and gold, man.
Yeah, I like the way they closed close to they're trading close to the highs of the session. I mean, looking good.
You get a total rejection. Silver,
total rejection.
1609 to 1644. That's good action.
And on big volume, which is good.
Yeah. Yeah.
And on big volume in both gold and silver. Let's see what gold. Yeah, both much more than average volumes. The other interesting market today, I mean, unless you want to continue with gold and silver, I was going to talk about natural gas, because today is, the big day on natural gas. And the EIA came out with a bigger than expected withdrawal. We expected 65 BCF. We got 78. Stocks are at 1.682 trillion cubic feet with a month to go in the withdrawal season. And the bottom line, Tom, is that's the lowest level of stocks in 3 years. But natural gas is having a really hard time picking up its head. I mean, it rallied 3 cents today. It should have been up 30 cents.
Yeah. And
is it, I guess that's because the warm weather is coming, but this market is totally counterintuitive. I mean,
they're going to get quite a storm up in the Northeast. I mean, this is like going to be really a dangerous storm. So
exactly, they're going to get a lot of snow, right?
A lot of snow, hurricane winds. That's you're talking about a disaster along the coast.
Right?
Because we have the full moon. We're going to be 3 days after the full moon. But bottom line, that's still going to be pushing those tides much higher as that wind is coming in. So it's problematic.
I'll tell you. I'm so tempted every time I see fundamental news in natural gas that's bullish to sell it, and then when I see bearish news to buy it, because that's just the way it's been trading.
Yeah, no.
Like totally counterintuitive market here, just being pushed around the prices.
Oh, big time.
Yeah.
And, so remember, folks, right here, bottom line, hour and 20 minutes, you're going to get an update. Great show, 5 to 6 o'clock Eastern Standard Time. Now, the easiest way to get this, folks, either go to TFNN.com, hit Target TV. Well, you can also go right to YouTube. Go to YouTube, pull up TFNN, just subscribe. That way you get every program that's coming up. Comes in great. Andy, you have a great one, a safe one. Of course, we look forward to the show at 5 o'clock.
Thanks, Tom.
Thank you. Stay right there, folks. We're coming right back. We have the Dow right now down 458. NASDAQ is down 103. S&Ps are down 40. We're coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 500. You get the NASDAQ off 114. S&Ps are down 46. So the largest, what has happened, and, on a continual basis, when we're talking steel, we talk China in quite a way. But the bottom line, folks, China is really just a boogeyman in the deal. They are not the largest. We don't import from them from the largest way. That's where the politicians go, that they are flooding the market with cheap products. Factually, the largest sellers to us are Mexico, Canada, and Brazil. So bottom line is that we'll see where this whole thing shakes out. And, what will happen, I was talking about the 3 states. The 3 states that will benefit from it is Pennsylvania, Indiana, and Michigan. Bottom line is that that's where the workers are. And that's what they're trying to save right now. That's how that shakes out. That being said, well, guess what? On the other side of it, you have the rest of the states, and you have the rest of us that are going to be paying up. And we'll see the aspect of just what the pay is. I suspect what we'll get out here in the next few days to really get to understand is the differential between what the product actually cost and what the finished product costs. Because, when you do take a look at a lot of products in general, meaning the beginning of the product, many times it doesn't add as much on as we may think it does. Now, in the steel business, that could be a lot different. The reason being is that, of course, when you look at steel buildings, the bottom line is that you're building with steel, meaning how many feet are you building with, how thick it is, and then putting it together is a different ballgame. But I suspect the market itself will be bisected and dissecting that in a huge way. Thus far, what we have out here, the automakers, they're the ones that are getting taken, and they're getting taken pretty quick. It looks like GM's going to do an ABC down. Now, GM has been coming down since 46. GM looks like it topped out the 24th of October. What you have here, GM's getting back inside this lower range, and the danger for GM is that we are at 37.47, while GM's got a high volume low at 24 bucks. That is one number. That is one monster number. We go take a look at Ford. Ford also is busting into its low. It has volume on this move. We put Ford back. Ford has been a mess for a long period of time. So it's certainly not steel that's just wrecking Ford. You know, Ford, 16 bucks is trading out here in 2010. It's been in this consolidation for a long time. The bottom of this consolidation for Ford is $8.72. Now, you bust $8.72, that is going to be monster problems, because then we will go back to the lows of 2008, and the lows of 2008 are laying out here at, I can't even go there. So, yeah, you're talking $5, $5.70. That's not the low either of 2008. That's the highs of the low of 2008. That's how that baby is shaking out. Let me go take a look at Alcoa. So let's see what Alcoa is doing. So you get the aluminum business also that's going to have tariffs. That's not doing anything. That's really intriguing. You know? So what we do have is, as Andy was just talking about too, the bottom line is that this thing isn't signed yet. So it's going to be really intriguing, you know, if in fact if it doesn't get signed, oh, guess what? That baby, you know, it gets changed before it actually gets signed. If we go over and we take a look at the gold complex, what we have with gold, this is straight across the metals as well as the indices. You had the XAU reject lower price out here today, $76.80, was going into the swing low from the 9th of February. It has lighter volume. Bottom line, that's saying that can't bust them down. Guess what? We're going to try to go bust them up. And this is going to have everything to do with the good old U.S. dollar. We get into the gold bugs index now. This one is really a cool one. The reason being is this. So your first low in gold, if I go back to December of 2017, you had the gold bugs index was 173.71. We busted that in February of 2018. We went to 170.89. Today we went to 168. I like this when you actually did something like this. Why? Because what markets tend to do when they're going to go a lot higher is that they're going to spike the lows a few times, and that's exactly what we did. We spiked those lows. What the market is looking for is that are there more sells under the market? And guess what? When they can't find those more sells, then it's a clear base that, okay, now we can go, we can buy. There's no more sellers. The market's cleaned out at the bottom. We want higher price. We go take a look at, let's go take a look at, first I'm going to take a look at Rangel Resources. The reason, because Rangel used to be one of the best stocks. This has been a laggard in a huge way. You know, Rangel, if we go back a month, went from $104, hit 79 bucks today. Now, Rangel's got to get back inside 81.35, so it hasn't done it yet. If we bring this back, let's put this on a monthly. See where we're setting up in a monthly. Setting up in a monthly, it's not bad. Setting up in a monthly, last month it came down with 18 million versus 30. Bottom line, on a monthly, we are back inside the range, and it didn't break a major swing. The major swing there would be $67. An Eco-Eagle, AEM, take a look at an Eco-Eagle. That got down to $37.35. Took a hammering, big hammering. We take a look at that and put it on a monthly, and what you have, you came down with 34 million versus 41 million. You're back inside the range. Good number. That's the bottom line. They took them south. They took them south good. And then guess what? They rejected lower price straight across the range. And it's all about that dollar, folks. That dollar wants lower price. Now, the real question is that I guess it really wouldn't be a question anymore why it wants lower price. Not has to do with the tariffs. It really has to do with our deficit. Bottom line is that you know, tax break. We're gonna pay a lot less taxes. But what does that do? Well, simultaneously, what that does is that's going to ramp up the debt structure, the deficit, and then if in fact this tariff really does come in, guess what? We're going to be paying more money. So you have two different things happening. So you're ramping up the aspect of what we're going to be paying. I would say the positive out of the market pulling back is you can see the bonds and notes. Once again, they're into buying the bonds and notes. So there we go with the aspect that these rates, bottom line, still going to be low. If we go to the Fed Fund future rate, let's see how that's shaking out here today. We had Powell speaking out here, and he was dovish speaking out here today versus, you know, I think he was clean in the speech. Bottom line, I think he was dovish, though. In the Fed Fund rate right now, we have, you get a 90% chance that you get 25 basis points March 21st. You're down to 66 for June 13th. And this changed quite a bit today. And then it went under, well, it's 40% in September. That baby was running out here over 50%. So these things change really quick. There's no two ways about it. You get a market that's hit, you can change pretty quickly. You stay right there, folks. We'll be coming right back. We have the Dow Industrials down 372, NASDAQ off 83, S&P's down 32. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 400. NASDAQ's down 89. S&Ps are off 36. Percentages out here, what you have, folks, we have the Dow down 1.6. NASDAQ's down 1.2. S&Ps are down 1.6. We are going to have volume on the way down, folks. You're going to get, once again, another expansion in volume. What we got yesterday in the NYSE, it was a monster expansion. You know, we went from 580 million up to 1.1 billion in the last 5 minutes. Right now, you're at 734, so I do expect we're going to do at least a 1.1 billion. If we go take a look at the composite already has volume behind the move. We're already in 2.2. That's going to lay in about 2.5 billion. We take a look at the Qs. What you're going to see with the Qs right now, monster volume, 64 million shares. That's after making highs with 42. Bottom line is that your high volume, low out here of the 9th is game. The real kick is going to be here. Do you stop before it, which I do expect we're going to stop before it. You're going to go sideways, and then you're going to build cause. If you do that, then you have a potential very large ABC structure on the way down. You do not have an ABC structure on the way down from that last swing low. The ABC that I'd be talking about is that this would be making the A to B right now because we had retraced a 0.786 retracement of that whole move. There was a monster counter trend move. Bottom line, if that's what we get, then you get game big time down to about 142, which brings you back to September of 2017. So there's not only volatility out here, but what you do have is that you have markets that have got into highs with dramatically lighter volume, came off the highs with volume. One of the first indications that we're going to get a clue as how we're going to hit this February 9th level is going to be the XLE. The XLE is into that bar. The low of that bar is 64.45. The high was 67.58. We're at 66.75, and you are barreling into that with volume. You break that baby with volume in the next week, guess what? Hold on tight. You stay right there, folks. So we're coming back with lots of numbers after the close. We get our man, Mr. Chris Gaffney, the president of Everbank World Markets. The Dow right now down 370.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Seek to know the truth. When you hear an opinion and believe it, you make an agreement and becomes part of your belief system. The only thing that can break this agreement is to make a new one based on truth. Only the truth has the power to set you free. So true. Market-wise, let's take a look at it out here. We had the Dow Industrials down 420. NASDAQ down 92, S&P's off 33. Percentage-wise out here, folks, you had the Dow down 1.68%, NASDAQ down 1.27, S&P's down 1.31. Gold contract flat, $1,318. If we get over and we take a look at that gold contract, what you're going to see out here is that we traded down to a price point of $1303.08, $1303.60. You rejected that price. We did 398,000 contracts, big contract volume, but the bottom line is that we're going into 463,000 contracts. So you did reject it. You rejected the swing point. You get into the breakout area from the 2nd of January. Bottom line, can't bust them down. Guess what? We're going topside, folks. Deviant market. You got to love it. 1370.50. We're at 1317.18, and you are coming into a Friday. And Friday in the currency markets, folks, can get really volatile. I expect we're going to see some volatility out there, and I expect we're going to see the volatility in spades, in the markets, all the markets, that being the equity markets, the currency markets, as well as the commodity markets. We get over and we take a look at the silver contract. Silver caught a nice bid out here today. Silver is psycho. There's no two ways about that. Silver market, we got down to a price point today of $16.16. You broke the swing low. Bottom line, got back inside it, has the juice beside it. You have 97,000 contracts. Now we have game on once again for $17.78. Big numbers out here all across the board. Notes and bonds want higher price. If we go and we take a look at the TLT, the 20-year plus fund, what you're going to see is that the TLT bottomed out last week on the 21st. You get volume on the move today. It's taking out a swing, taking it out with volume. You're inside the slightly higher range. You're at 119.32. Bottom line, I expect what you can see here is that this thing can run to 122.42. The 10-year note, bottom line, what that had done, that was the first one that had bottomed out, by the way. This was giving us an indication going back almost 9 trading days. The first low that was established out here on the 15th, we got to 119.14. You basically went sideways. Then we got a sign of strength. We got a sign of strength. The price didn't hold, but we got that sign of strength on the 26th. You backed down again Tuesday and Wednesday of this week. But when you were backing down with light volume. First day we backed down with 1.9 million shares. That was on Tuesday. On Wednesday, we did 1.7. And guess what, folks? You go topside today with 2.4. You take out the swing, which was 2.3. This sets up 122.02. That's going to put a lot of people, no doubt, in shock. Why? Because the fact of the matter is that the Federal Reserve was out there, and fundamentally, we're all kind of expecting that this short-term rate hike would have 3 this year. Once Powell spoke the first day, the probability was going up that we'd have 4 short-term rate hikes. Most of that today, just one day in the marketplace, got back to 2 for the year, which is over 50%. The third one now is at under 50%. It's at 40%. So you can see what down markets can do very quickly. What we did out here today is that you had the speculation. Well, it wasn't speculation. Trump came out and said he's going to put tariffs on steel and he's going to put tariffs on aluminum. What that did with the U.S. Steel, you took U.S. Steel upside, took it up 5%, $2.50. What was intriguing is that AKS, another steel stock, up 49 cents, but not much juice. Nucor, another steel stock out here, that was up $2.13, had juice behind the move. That being said, when you look at the yin and the yang, the stocks that got smoked market cap-wise much more. You had GM get destroyed. That was down $1.56. 25 million shares traded. That wants dramatically lower price. Ford Motor Company, we're talking steel. Anyone that's building with steel, folks, is going to get toasted here. You get Ford Motor Company down 32 cents. That's going after its swing low of $10.19. We hit 10.20 today. We'll see whether we break it. You break it, Ford can actually go to $5.60. That's pretty intense. There's no two ways about that. King Dollar. What do we have with King Dollar? King Dollar couldn't handle price, folks. Came into its swing point. Now, it came into its downdraft. It got over the swing. The swing that we're talking about was the February 9th swing, 90.055. You got into the downdraft, and it gave it up. 90.530. That's what the King Dollar had a hold out here today. Couldn't handle it. Closed got into it, closed under it. Volume wasn't bad, by the way. We did 39,495 contracts. That was only going into 40,000 contracts. That being said, guess what? You can't handle it. You're gonna now King Dollar's gonna go after 88.150. You're talking about some big numbers here. If we go take a look at the small caps, you take a look at the IWM. IWM traded down 40 cents. You got to a low today of 148.38. That is building cause to get into the swing point from the low, which is on the 9th. The high of that low is 147.94. It did get into the first high volume low. That means that your probability goes much higher. That guess what? We are going down into that level. If we go to look at the XLE, bottom line, you're going to see that the XLE had a problem out here. One of the biggest ones to take a look at when we're talking interest rates is the XLF. XLF came down with volume, 50 cents. You're at 28.37. That right now is at the highs of the lows. That's the bottom line. You get the highs of the lows inside the XLF. We take a look at some of the higher volume stocks out here. What you're going to see is this. The higher volume stocks, you get Bank of America down 50 cents. You got Micron Tech off 119. You get Apple off 312. United States Steel up 250. And, you know, when you do look at the steel business, folks, you're going to hear that, yeah, that the boogeyman is China. Well, the boogeyman's not China, folks. We import more steel from Brazil, Mexico, and Canada. Those are the places we actually import the steel from by a large amount, too, by the way. Dow Industrials finished down 420. You had the NASDAQ down 92. S&P's off 36. You stay right there, folks. We get our man, Mr. Tim Gaffney, coming up, the president of Everbank World Markets. We are going to be talking currencies. We're going to be talking oil. We're going to be talking market-safe CDs. Coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish down 420, NASDAQ off 92, S&P's down 36. Now let's go over to our man, Mr. Chris Gaffney. Chris, folks, is the president of EverBank World Markets. You can come over to our website at TFNN. You can hit the banner right there, EverBank banner, or you can just go to everbank.com/TFNN. I'm sure you've heard of Chris on this network many times. We are going to talk out here today. We're going to talk about the Petro Currency Market Safe CD. We've been talking about market safe CDs for a while. You know that EverBank is on the forefront of great products that are basically principal guaranteed, which is just amazing when you take a look at how they put these products together. Chris Gaffney, welcome back to TFNN.
Thanks. It's always a pleasure to be with you guys, and it's really exciting today that, you know, this is the first day of our offering period for the Petro Currencies Market Safe CD.
Yes, it was great timing. There's no doubt about it. So first let's talk about what actually is inside the Petro Currency Market Safe CD, and how does the Market Safe CD work, Chris?
Yeah, all of our market-safe CDs are designed with principal protection. So no matter what happens, your principal is protected. This market-safe CD is designed around 4 currencies. And of course, with the name, the Petro Currencies, they are 4 of the largest oil-producing non-OPEC countries: Brazil, Canada, Mexico, and Russia. So we've combined those 4 currencies into this CD. The upside payment is going to be based off the performance of those 4 currencies over the 3-year life of the CD. So the CD has a 3-year term.
Yes.
In addition to that upside, though, we're going to use two times leverage. So no matter what happens when those currencies move, if they move up in value over the 3 years, we're going to multiply that return by 2, and that's what's going to be paid out on the CD. So it's a 200% leverage factor.
Now, folks, you know, you can just go to everbank.com/TFNN. You're going to see there's all the information's on it. There's a great video that Chris did on it also. Now, are there going to be resets on these two, Chris, or is this going the whole way?
No, it's what we call a point-to-point structure. Okay. So we'll take the price of the currencies at the beginning of the CD, and then we'll compare that to the price of the currencies at the end of the CD, and it's that return. They're equally weighted, so each 4 of them has an equal weighting. And then again, we're going to take that currency return, multiply it by 2, and that's going to be the return on the CD. The minimum, as with all of our market-safe CDs, is just $1,500, so it's designed for the retail investor, and it is IRA eligible. In fact, it's I think a great product for IRAs in that, you know, you get that principal protection. You have an unlimited upside because there's no cap on the upside. So you really have an unlimited upside with a principal protection, which is perfect for those retirement accounts.
Yeah, there's no doubt. Now, when we're talking, it starts today. The program starts today. The issue date, I believe, is going to be May 7th, and then the value date is going to be May 3rd. Can you just explain how those dates work?
Sure. So yeah, we have what we call a funding period on these market safes. Yes. So we have a period where we're collecting investors' interest in the initial deposits, and then we're going to set a initial pricing date. That initial value date is May 3rd, and then we'll have an issue date. Well, the actual CD will be issued on May 7th. So that's the day the CD will be issued. On the final dates on May 3rd of 2021, we're going to have the final valuation, and then the maturity of the CD is going to be May 5th of 2021. So it is a point-to-point pricing. We do have a because it's a limited time offering, there is a funding deadline of April 19th. So if you're interested in getting involved, it is best to get going now on getting the account opened up and getting the funds in, because it is a funding deadline of April 19th.
And you know what's amazing here? I mean, we've been talking about this for a while. You know, the dollar has been going down, bottom line, since January of 2017. You know, so it's also a great way, you know, basically.
To play the,
yeah.
Yeah, and it's not really, you know, you're not buying oil here. We call it the petrol currency CD because all of these countries have economies that are large exporters of oil. But we're not, you know, we're not buying oil. You're not investing into oil. You're investing into currencies. And as you suggest, we've seen a change in the trend in the dollar.
Yes.
We've coming out of a 5 to 7 year dollar strong trend, and now we're starting to see that dollar start to turn, and it's been weaker. In fact, you know, it started to weaken in 2016. In 2017, pretty much across the board, the dollar was down versus just about every currency.
Sure.
And so far this year, it started to weaken also.
And, you know, when you just look at these, I just pulled up the Mexican peso and the Canadian dollar for a second. The bottom line is that they've got dramatically stronger, of course, as our dollar gets weaker. You know, the Mexican peso, if I look at this, back in, just pull
It got hit hard right after the election. So in November of 2016, it was down pretty much. But, yeah, it had a good year last year.
It did. It was huge. And right now you're 18.84 to the U.S. dollar. You take a look at the Canadian dollar. That Canadian dollar out here, let's see what she's running at. This is running at right now, 128. You know.
So these are currency. It's a way to play those currencies versus the dollar, and also, again, you know, the reason we think that petrol currencies are going to do well is because of the global growth. I know we had a little hiccup today on the equity markets because of, you know, some of Trump coming out and saying he's going to put some tariffs on some of the goods, and investors are a little worried about a trade war and also on the interest rate direction. But overall, we're seeing higher global growth. IMF just came out and said, you know, the growth is going to be the highest in 7 years. Oil fuels global growth. Oil is the fuel of global growth. So as the globe increases, growth increases, you know, it should benefit these four commodity-based currencies. And
so just to recap, so let's say that we put them all together. You know, we do the 3-year deal. The currencies go up 3%. Inside of this, because you're doing double leverage, the client would get 6%, hypothetically, if that went up 3%. That's correct?
That's exactly right. That's exactly right.
And
so,
then the principal is totally protected. Let's say we go the other way. You get down 3%. Yep. Bottom line, you get an IRA, you put your money in, you're going to get 100% back in the principal.
That is exactly correct, and that's the important thing is, you know, return of principal in addition to return on principal. So
it's amazing. I'm telling you, these products are so cool, man. They just really are. And you know, I was at the Traders Expo and I got some good feedback last weekend.
Super.
Yeah, you know. So listen, folks, the way that you get more information, come over to our website at TFNN. You just hit the Everbank banner. You can go right to everbank.com/TFNN. All the information is right there, and of course, each and every day we'll let you know just how you can get over to Everbank, get these products. So you get a 3-year term, you get 2 times leverage, you have 4 currencies, you get 100% principal protected. Chris, you have a great one, a safe one. We love these products. Thank you so much for coming on. Of course, we look forward to having you on again.
You bet. Thanks.
Thank you. You stay right there, folks. We'll be coming right back. This is Tom O'Brien. This is TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. If we take a look at some of the higher volume stocks out here today, you have Bank of America down 50 cents, Ford's down 32. You get Micron Tech off $1. Apple is down $3. U.S. Steel, that was up $2.50. You had Verizon up 22, Wells Fargo down $1.10. What's intriguing here is, so if let's go into the steel deal for a second. So I'll show you something in steel. This gets really interesting, man. There's a lot more variables than this, that's for sure. So U.S. Steel's at 46. This has been strong for a long time. In fact, on the 16th, this took out a B point of an ABC structure on the way up, and it's a big one, too. 23 is your A. You get 41 as your B, so you get, 18 points, which is saying $48. Let me see this on a longer basis. So 48, yes, so the bottom line, this looks to me like it's actually going to go up to 50 or 60, 50 or $70. Yeah, we've been in this consolidation for a long period of time. If we take out right where we're at right now, 46.55, you get game going up into this 64 area. Now, that being said, you know, for some reason, I remember the first, this was when President Kennedy was there, U.S. Steel struck, and U.S. Steel was, the steel workers, they were basically one of the strongest in the whole country. I don't remember exactly what happened at that point, but the bottom line is that I knew it was a big deal. Now, the last thing that I do remember, okay, was the last half that came into place was I was in the market. It was in 2002. Bottom line is that the President Bush had put a 30% tariff in, and bottom line is that if you want to, you know, there's other variations that go into this, but the way the market was taking conniptions out here today, if I show you something, bottom line this market in 2002, dropped 30% like in a, heartbeat. What also simultaneously happened, where's 2002? Let me get this. So 2002, I think it was up. The market had been going down anyway. So, we started going down in 2000, but then you get the tariffs in. The tariffs, I think, went in at 1176 S&P. We ended up going down to 800 S&P. And simultaneously, if I show you something here, let's see if I can do this on one chart. It'd be pretty cool. Because we've been kind of wondering why the economy's going great. I mean, I think the economy's going great. It seems like, you get unemployment is at lows. Things are moving. We're not in depression anymore. And bottom line, let me see, S&P. What I'm trying to do, I wanted to compare, because what also happened then, I'll pull up the dollar. What also happened then is that you also had the dollar get toasted when this happened. Now, the cool thing, 2002, let me bring this back, 2002. I just remember because that's when I started the gold report. That's what was going on. The dollar, folks, was 121. Yeah, here we are up here. So the dollar was 121. And that thing went south so quick, it was insane. This is when gold went to the moon. So we went from 120, and it never stopped until 80. That's how dramatic it was. And then if we look at one more, because what happened simultaneously then, and this is going to get intriguing because this is absolutely counterintuitive to what we're thinking where we are right now, is that you had the bond market also, rates went down dramatically. Let's see, 2002. No, 2002. 2002. 2006. I got to bring it back further. Okay. So 2002. There we go. Right there. Yeah. So we had interest rates go down dramatically. We started out, we're at 101. Bottom line, you're all the way up to 117. So this is going to get intriguing, and I'm sure some of this people are going to be digging out tonight to basically find out what happened the last time. As one of the main reasons I remember is specifically because that's when I started the gold report. And what had happened there is that the dollar got smoked dramatically. The market got smoked dramatically because on the first get-go of the market down, what had happened is that gold actually went up. After that, realistically, when markets get toasted pretty good, gold is not as safe as people think it actually is. It will go down with markets. It will go up with markets. What I have found is this, is that what tends to happen is that if markets going down, gold won't go down as much. As markets get a counter trend bounce, meaning and go up, gold will go up higher. When I take a look at the dollar index today, also how that operated, this dollar, looks to me flat out. It's in a confirmed ABC structure on the way down. We take a look at the how it's trading. You're at 90.240. This baby, you broke down once we broke the 90 to 92 point area. You got in a lower range, number one. It has a price projection of 82,340, but guess what? Your swing point's at 78.90, 78,930. So you get game on here. And if that's the case, you want to wrap your head around these commodities, because if we and let me go over to the copper market for a second, because copper was showing, and this is what ended up happening in 2001, 2002 also, is that copper was the first one to take off, and it took off a good year before all the rest of the commodities actually took off. If I bring this back, let me bring this back too. I forgot about this. Let's see. Oh, this is sick. So look at this. Copper was at 65 cents a pound. Copper took off. First leg took it up to 139. Went sideways, and then oh my God, then it just took off beyond belief. And in the crash of 2008, it came back down to $1.25. and then made a new higher high. So thus far, what you have with copper, you know, bottom line, you have a higher high up at 464. Let me see the last leg down. This would be pretty cool. I haven't done this at all. So let me see what that. So if we go to the highs to the lows, yeah, that's a big retracement. So if you go to the highs and the lows, we did do a 0.786 retracement from the low of 2009 to the high of 2011. That is saying that you probability-wise, you're not going to go break out of the highs. But guess what? Copper at 464 would be one large number. No two ways about that. We go inside the NDX 100. We take a look at the strength versus the weakness out here. Oh, actually, we had a question on Monster.com. Not Monster, Monster Beverage. Monster Beverage was down 20% today. This is down $9.15. And I play this a little bit closer and see what we got. Okay, so you're off the high in volume. You know, you're at 54. Bottom line, 48 this game. 48 to a 41. The way it's coming into the area right now, yeah, good inside the range. The way it's actually coming in, you get game at 41 bucks. Right now, you're at 54. You stay right there, folks. We'll be coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow down 420, NASDAQ off 92, S&P's down 34. You know, if you take a look at the aspect of what we import, steel and aluminum, versus what market cap lost out today. It's a big number. Now, my take is that we were coming down anyway, but there'll be plenty of folks that say, okay, this is the beginning of a trade war. That's why we're coming down. Hey, maybe, who knows? But here's the correlation. It's pretty intense. Per month, you're talking about $3 billion. So we're talking about basically $36 billion a year, okay, on importing the metals in order to basically get the steel going versus market cap out here today. We lost $500 billion. So big number. Let's go take a look at the DAX and see what the DAX, one of our targets. Thanks, Z. Appreciate it, man. The DAX out here today went down 244 bucks. We are at 12,190. And this is a big number. Okay, so yes, this is hammering into this low, and you got some volume behind the move too. So the DAX did 117 million today. Now the DAX always does. That's just how the DAX trades. It doesn't trade like we trade here, meaning huge volume. Your swing low is 12,003. It's going to get hit tomorrow. We did 181 at that swing low. What's going to be intriguing here about the DAX is this. Is that this will give us a huge amount of information tomorrow. The reason being is that the DAX didn't do a huge counter trend bounce like we had. This can be a monster ABC down. Your 8 point on this is 13,600. Oh, it's a big one, 1,600 bucks, which would get you down to 11,000. Let's go see what's at 11,000. So 11,000. Yeah, that would make sense. 11,000 is where we broke topside in December of 2016. Where the problem comes for the DAX is that the DAX is already inside its lower range. So that's game. Let's go to the FTSE and see what's happening in the FTSE. FTSE also is coming into it. We come down $56. You had the expansion of volume also. You did 855 million. You're in the bar already. The bottom bar is 1.3 billion. This could be an ABC down too. See, coming into a Friday, this is going to be really dangerous. So your 8 point on this is approximately 7,800. Your B, so it's a 700 A to B, which is going to get you a 6,550. 6,550. Let's see what's at 6,550. That's at the June 2016 level. Yeah, so that is saying that the FTSE also, number one, is going to try to get back inside its lower range. And if that's what you get, then you got game down to like 5,400. So there's going to be some big action out here for quite a while. That's what it seems to be indicating. And I mean a big action. GE just continues to come down with volume. Bottom line, this baby's in trouble. You hit 13.95 today. Last swing low. This is the lowest closing low it had in a long time. You are at we did volume of 90 million. You come in. You broke the 145. This thing's going south. Inside the gold market, you can expect action, folks, topside. Bottom line is that you rejected lower price all across the gold market. The equities, the futures, right across all of them. Let's go take a look at a couple of the high flyers. So we had Amazon had been testing its highs for quite some time. Yeah, it's going to be off the high with volume. Okay, so you get back inside 1498. You're at 1493. You had volume on the move. That's saying that now game on Amazon is 1265. We go to Google. We take a look at Google. Google out here came down on volume. We're at down 35 bucks. You're at 1,069. This is intriguing because this is almost right at the highs of the lows already, man. Google's going to be the highs and lows tomorrow. So Google's going to tell us a huge amount, folks, of how it's going to handle this high volume low at 992. Let's go to Facebook and take a look at Facebook. Same style. Facebook's into the bar. So Facebook, 176.90 was the number. That's into the bar. So Facebook's going after the low, 167. Let's see, NVIDIA. Now, this is one of the strongest stocks in the marketplace. And guess what? It came off $9. Already tested the high with light volume. Has the high volume low out here, 204. Now, the high of that low is 225. So I expect what you're going to see is that it's going to go after the 225 first. We got down to 228 today. You did have a monster expansion of volume. The last high had 11 million shares. You did 24 million today. Depending on how long you've been in this marketplace, folks, what you're going to see is that your supply and demand curve is dramatically lower in this marketplace. ExxonMobil, we go take a look at Exxon out here. Yeah, this is one we want to keep watching. Why? Because Exxon is into the bar also. $73.90 is the low of that bar. The high is $76.48. Guess where we are? $75.20. You're into the bar. You have volume on the move. We take a look at Chevron. Chevron's in the bar, too. This thing's going down there, man. The real question is going to be, as we get into that bar, is this going to be an ABC structure on the way down? Now, remember something. The indices, the Dow, the NASDAQ, the S&P will not be a confirmed ABC down. The reason being is that the counter-trend bounce was so large that you can't have an ABC structure on the way down or the way up if you had done more than a 0.618 retracement of the prior move. And that's what we have done in all of those indices. Let's go over and take a look at Apple. Apple's off the high with volume. And you know, it's amazing about Apple. You got 1, 2, 3, 4, 5. This is going to be a classic, man. I don't know if it's going to be a classic, but you know, you have double tops. It's going to be amazing if on Apple's case, is it a 5-topper? Because that's what it looks like. When I say a 5-topper, I'm talking about 176.24. Because no matter which stock you get, folks, what you want to look at, and every single one of them, I haven't found one that doesn't have a high volume low yet, on the 9th of February. So the real kick is going to be, what price are you at a high volume low in February? In fact, let's go and take a look at some of the home builders. What you see out here. So check this out. This is intense. Toll Brothers. Toll Brothers actually got into the lows today. 43.07. Now, this is where it's going to get interesting, because what you're going to see is that this actually didn't have volume when they got down to the 5th and the 9th. They were going into high volume, going all the way back from November 2nd, testing it. They rejected this baby today. Let me pull up a few more. Let's see. Because, you know, when I just went through the aspect of the TAF and the aspect of bonds and what the dollar did, that would be saying that rates are going to stay low, which will be just a mind blower because it's so counterintuitive. We take a look at DHI. DHI was actually up today. Yeah, this is a heads up, man. This is going to be a trip. Yeah, bottom line, DHI, they want higher price, man. Wild. You stay right there, folks. We'll be coming right back. Don't forget, you can also test drive my Gold Report 30 days absolutely free. Go to TFNN, go to newsletters, go to investments newsletters. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We stay with that home building industry. If we take a look at LGI Homes, we get a question in the den. Can it be an ABC down on the weekly? And yes, it can. You came off a high of 79.55. That was generated in January. You got down to 57. You have broken it with volume. Bottom line, we'll see whether it turns into a complex one. That would be setting up a run back into those $44 level. That is on the weekly. On the daily, what you have out here is that you're actually coming into a much higher volume deal, and you just rejected it. You just rejected the highs of the October 5th. That's how this baby is set up. We put this, you'll see it's kind of sticking out like a sore thumb. You came into it today with 580,000 shares versus 789. But on a weekly basis, bottom line is that, yes, that is a confirmed ABC structure on the way down. So we'll see where that whole baby shakes out. Don't forget, folks, we do live programming every trading day. We start at 8 o'clock in the morning. We go to 5 o'clock at night on Monday, Wednesday, Friday, 6 o'clock on Tuesdays and Thursdays. Our man, Mr. Andy Heck, is coming up right now. Now, you can get all this programming. Just go right to YouTube. Go to YouTube, pull up TFNN. You can subscribe. It's free. All the programs right on your cell phone. It comes in great. Audio, video, all of the above. You can also go to TFNN.com and you can hit Tiger TV. Market out here today, folks, you had a high volume day on the way down. We did 1 billion shares on the NYSE. You take a look at the NASDAQ Composite. NASDAQ Composite did 2.4 billion. So bottom line is that what is game on here is that February 9th swing low. The real question is going to be, is that do you build some cause before you get into that price? If you're a bull, you want to see it get hit right now. Why? Because the amount of energy that it takes to get into that number one, I don't expect you to get more volume with it. If you're a bear, what you're going to be looking for is that you're going to be looking for a sideways move before you get to that place, and that would be doing a small ABC structure down going into that. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it, folks. Thanks for being here. Wow! Go get them, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.